in these rich ratios that, by the way, are being seen over most of the other sectors. Let's get to our floor show traders, Tom Hayes and Phil Flynn. Tom, I'm going to start with you. The semiconductor sector has had some real doozies here. NVIDIA, NXP Semiconductor, Advanced Micro Devices. I mean, look at AMD. Got 134 price to earnings ratio. Folks, just so you know, it was about a year ago that PE ratios were around 20. So are investors paying too much if they buy right now?
Well, Liz, if you look, semiconductors are priced for perfection. Banks are priced for the apocalypse. Neither of those things will probably happen. This is the epic battle between value and growth. And the money moves into growth when people are expecting a slower economy. So when we see cases spike up and people fear regional closings, you see money move into tech and semiconductors, and people will pay whatever they have to find those small pockets of growth. But when you look at May, when the recovery was going and cases were coming down, we had a huge rally in cyclicals and value. Historically, cyclicals and value outperform coming out of recessions, number one. And number two, when you look 1 to 2 years out for people paying 100 times earnings, it usually doesn't end very well. So I just look at stalwarts in the economy, in the market, like Buffett bought $5 billion of his stock in the last few weeks, and he's done 2 big deals in cyclicals recently.
Yeah, I think I get nervous, though, Phil. And Tom's right in certain regards, you know, but it isn't just technology. Retail PE ratios are very high. You could look at Lululemon, Walgreen Boots Alliance, PayPal. These are extraordinarily rich as well. And Rich Bernstein, actually an analyst that people read about, you know, he had made this interesting comment where he said, that's like buying a Nissan at Rolls-Royce prices. Okay, so you wouldn't really do that, would you, Phil?
Well, it depends on what year the Nissan is. You know, if you're buying a 1960s Nissan, it might be a good deal. So, in other words, you have to put it in perspective and compare of what you're looking at. And one of the things you have to remember when you're looking at these PE ratios, we're looking at PE ratios with the biggest amount of global economic stimulus ever. I mean, we're talking $10 trillion and counting of stimulus. We're talking about historically low interest rates for an eternity, or what could be an eternity. And anytime you look at that, you try to look at the value of these stocks and these price to earnings in today's dollars, and you look at where they're going to be a few years from now, when we might have a better economy, then maybe we're not so much out of the line. That's why these things look so high. You look at some of those individual stocks, they all have their own individual problems. I mean, eBay has done fantastic, right? Everybody is shopping at home. Yeah. eBay is a big name. You look at Lululemon, they had a sale. Oh my gosh, the stock tanks. Oh, you know, I used to like sales, right? But I guess it was bad for the stock. You know, so when you look at, and you look at Walgreens, Walgreens, obviously, they've laid off a lot of people. They're restructuring. They have to compete in an online world. So all those stocks have their own individual issues. But if you look at them as a group, it's all about the stimulus. It's about low rates.
Well, I know. I just want to quickly check Apple PE because, you know, that one is actually a little bit more down to earth. And yes, Apple PE at the moment is 31. You know, it makes you wonder if these stocks aren't getting too expensive. Guys, thank you so much. We have a compressed